Marc Faber is our guest host this morning. Let's come back to you, Mark. I just want to pick up on some of the real investment decisions then that our audience can take away. Yes. You mentioned in your notes that you would buy oil stocks at this point, and you listed a number of American oil services and oil major stocks that you think it's acceptable to own at this stage. Why would you buy Exxon, Chevron, Schlumberger at this stage?
Well, I don't think they're great companies or great investments, but their stocks have corrected down. And I believe that for the next 6 months, the global economy may look somewhat better, particularly compared to 2009, because don't forget, March 2009 was about the bottom of the recession. And so we are comparing now with very low level of economic activity a year ago. So the statistics may look somewhat better. And if the Western world recovers somewhat, combined with the still rising demand in emerging economies, I think that the oil price would rather go up than down. And therefore, I think that oil stocks could perform reasonably well. By the way, also mining companies.
And you continue to bang the drum for the emerging world. We were talking off camera. You were saying you think the Middle Eastern markets are poised for a rebound at this stage. So let's just discuss where emerging markets ought to sit in the portfolio.
Well, I think that if you look at the world, there are many statistics that would show you that, say, car sales in emerging economies are now larger than in the developed world. Oil consumption in emerging economies is larger than in the developed world, or semiconductor sales in Asia ex-Japan is larger than in Europe, the US and Japan combined. So these statistics show you that the goods markets are huge in emerging economies, by account that 80% of the world lives in emerging economies. So you should have 50% of your money minimum in emerging economies. You said you have 90% of your money.
We got to let you go at that.
Yes.
But thank you very much indeed for that.